Sawyer Silver Vault. Something is building inside the Bitcoin market tonight, and most people have no idea it's already happening. You turn on the news, you see prices moving sideways, you hear the same talking heads say, low volatility, and waiting for a catalyst. But what if I told you that beneath the surface, inside the order books, inside the ETF flows, inside the wallets of whales who have been silent for months, pressure has been quietly mounting. The kind of pressure that doesn't just fade away. The kind of pressure that, historically, has always led to an explosion. And tonight, I want to show you exactly where that pressure is coming from. Not just the obvious signals, but the hidden ones. The ones that most retail traders scroll right past. But first, I need you to understand something critical. This isn't about a price prediction. This is about a pattern. A pattern that has repeated itself before every major Bitcoin move in the last 3 years. Let's start with the ETF data, because this is where the story gets strange. Last week, spot Bitcoin ETFs saw their largest single-day inflow in nearly 6 weeks. Over $400 million poured into just 3 funds. Normally, that kind of inflow would send prices ripping higher. But Bitcoin barely moved. In fact, over the last 10 days, the price has been compressed into a range of less than 5%. Tight. Quiet. Too quiet. Professional traders call this a coiled spring. And here's what nobody on mainstream finance is telling you. The last time we saw ETF inflows this strong without immediate price reaction was exactly 47 days before the November 2023 breakout. But tonight, there's an even larger detail. Something that happened just 6 hours ago that completely changes how you should read these numbers. A single institutional address, untouched for over 8 months, suddenly moved over 12,000 Bitcoin. Not to an exchange, not to a custodian, to a brand new, unlabeled wallet. On-chain analysts are split. Some say it's just internal housekeeping. Others say it's preparation for over-the-counter selling. But there's a third possibility that almost nobody is talking about. And this possibility connects directly to something happening right now in the Chicago Mercantile Exchange futures market, the very same market where traditional finance giants place their biggest Bitcoin bets. Open interest on CME Bitcoin futures just surged to a 2-month high. But here's the twist. The funding rate is still negative. That means the new positions are overwhelmingly short. Bets that price will fall. So you have ETF inflows buying real Bitcoin, while Wall Street futures traders are piling into short positions against it. That tension right there, that's the pressure I'm talking about. And in the past, when this exact setup appeared, spot demand from ETFs versus short-heavy futures, it ended with a short squeeze that sent Bitcoin up 17% in 3 days. But before you get too bullish, there's another warning sign that every long-term holder needs to see. The stablecoin reserve ratio on exchanges has dropped to its lowest level since March. Less dry powder sitting on the sidelines means less immediate buying pressure. So we have conflicting signals, huge ETF inflows, massive short interest, low stablecoin reserves, whale movements that defy easy explanation. And on top of all that, the Federal Reserve just released comments that could quietly reshape liquidity conditions for the rest of the year. Late yesterday afternoon, a Federal Reserve governor hinted that rate cuts may come later than markets currently expect. That sentence alone, buried in paragraph 12 of a speech about labor markets, caused an immediate spike in the DXY dollar index. And a stronger dollar historically puts pressure on risk assets, like Bitcoin. But again, that's the surface level. The deeper story is that even with a strong dollar, global central banks are now increasing their gold reserves at the fastest pace since 1967. And what's interesting is that the same institutions buying gold are also quietly allocating to Bitcoin through the Swiss-based crypto ETPs. This isn't publicized. You won't see it on CNBC. But the on-chain footprint is unmistakable. And that brings me back to the title of this video. COMEX silver pressure is building again. Now you might be wondering, why is a Bitcoin channel talking about COMEX silver? Here's the connection. The COMEX silver market right now is experiencing exactly what Bitcoin's futures market is experiencing. A massive divergence between physical demand and paper short positions. In silver, the physical delivery queue has grown to its longest wait time since the Hunt Brothers episode of 1980. But prices haven't broken out. Why? Because banks are aggressively shorting the paper market to cap the price. The same mechanism, paper suppression, has been attempted on Bitcoin through futures markets many times. And every single time, when physical demand overwhelmed the paper shorts, the result was violent upside. So when I say something is coming, I'm not guessing. I'm reading the same mechanical signals that preceded every major Bitcoin move in the last cycle. But here's what you need to watch tonight. Not tomorrow morning. Not next week. Tonight. Because there's a specific on-chain metric that has predicted the last 4 short squeezes with frightening accuracy. It's called the exchange whale ratio, the percentage of total exchange Bitcoin held by the top 10 largest depositors. That ratio just crossed above 63% for the first time since the day before the March 2024 mini flash crash, and then the recovery that followed. So let me lay out both scenarios clearly. Scenario 1, the shorts are right. Global liquidity tightens. ETF inflows dry up. The whale movement was distribution, and Bitcoin grinds lower to retest the 52,000 support zone. Scenario 2, the shorts get trapped. ETF inflows continue. The negative funding rate forces short sellers to buy back their positions at a loss. That buying pressure combines with physical spot demand, and we see a rapid, cascading move higher that catches most traders completely off guard. But there's a third scenario, the one that keeps me up at night, the one that connects COMEX silver pressure to Bitcoin in a way most analysts haven't considered. What if the same macro hedge funds that are getting squeezed in silver decide to rotate capital into Bitcoin as a hedge against dollar debasement? What if the price action in both assets is signaling the same thing? That fiat liquidity is about to flood into hard assets, regardless of interest rates. That's the narrative that fits all the pieces. The ETF inflows, the whale movements, the exchange ratio, the futures positioning, the dollar strength that paradoxically isn't stopping real buying. So here's what I'm watching in the next 48 hours. First, the weekly ETF flow report due tomorrow morning. If we see another 300 million plus inflow while price stays flat, that's confirmation that hidden demand is absorbing every seller. Second, the CME futures funding rate. If it flips positive while open interest remains high, that means shorts are covering and new longs are entering. That's the ignition. Third, and most importantly, the stablecoin supply on exchanges. If that starts climbing, even a single %, it means sideline cash is preparing to deploy. And when all three line up at the same time, history says stand back. You're watching Sawyer Silver Vault, and I don't say this lightly. The pressure that's building in COMEX silver, in Bitcoin ETF flows, in futures positioning, and in the silent accumulation by large holders. It feels different this time. Not because the price will go up or down, but because the disconnect between what the media says and what the blockchain is showing has rarely been this wide. And as any silver or Bitcoin veteran will tell you, the widest disconnects often produce the fastest moves. Stay sharp tonight. Watch the order books. And remember, in markets like this, the biggest danger isn't a price crash. It's getting so comfortable with the quiet that you stop paying attention right before the noise begins. For more amazing Bitcoin updates and market insights, subscribe to our channel Sawyer Silver Vault.